Okay, quick fire then, Sven.
Right.
I'm just in this list because I didn't actually create any on this list. So let's go with it because this all says SW and SD. So Briscoe hasn't asked any of these. I'll try and figure one out by the end of it. So the first one on their list is Verizon. Sven CarlIN or Sven CarlOut? What do you think?
I'm in for dividend investors, safety, and for slow and steady, it really good business, strong moat, a little bit risky on the debt side, but yeah.
I should say I bought Verizon about half an hour ago.
Yeah. Oh, did you? Oh,
I did. Yeah.
Full disclosure there, apparently.
So,
okay,
Carlin in.
He's Sven CarlIN there. So next one is Disney. Sven CarlIN, Sven CarlOut.
I made a video about Disney about 2 years ago where I said that the Netflix option was completely not priced in. Now it's priced in, so I think I would call it a little bit more risky, but still good business, still really good, but likely now a little bit more exuberantly priced. Yeah. So let's say if Verizon is in from a value investing, this one, let's say now out.
Yeah, that makes a lot of sense. I think we agree with you. I didn't see that video. I've never actually seen you talk about Disney, so that'd be an interesting one to see. I came to the same conclusion, probably not 2 years ago, but yeah, that's great. So the next one, Sven CarlIN, Sven CarlOut on NextEra Energy. There's a lot of stocks in this one, Steve.
We get onto other things in a minute.
I didn't dig deep into it, but they constantly issue shares and they constantly finance and they constantly do deals in a very exuberant market, which is too risky because I have seen a lot of these house of cards simply unfold. And I don't know enough to say whether it is a house of cards based on liabilities and leverage or not. So I don't know. But I would look into that if I would be interested into a company like that.
Cool.
Yeah, it's so I'm going to say Sven CarlOut on that one because he's risk averse, so that's it.
Yes, definitely for me out on the risk because I looked, I saw too risky. Okay, thank you, goodbye.
That makes sense.
One of your previous favorites, I believe, Southern Copper. Copper.
All right, Southern Copper looked like a really good business, but now it all depends on copper. Now I think it has crashed a little bit, but for me it has to crash a lot more.
Yeah, we're throwing you a lot of low balls here because this is it. I already know the answer to some of these.
I have the answer. I'll tell you immediately. In the next recession, I'm in.
Yeah, that makes a lot of sense.
In fairness to Steve and me, here's what that's doing on that list. It looks like a lowball, but both Steve and I bought this around the time of Sven's video, sort of a year and a half ago or something like that. And it roughly doubled for us, and then it retreated back to about 60 or so, and we were sort of wondering, okay, we weren't interested in buying it after it had doubled. We were interested in buying it before it doubled. We wondered where Sven sort of felt about it kind of at the moment, because it's quite a way between those
Of
things.
course, when copper stocks doubled or tripled, the risk went up and the return went down. So it's always about balancing that with other options. So for now, let's say it's medium risk, medium reward, which is not the case what it was a year ago when it was absolute dirt cheap, no risk, extreme reward.
Okay, you can't ask for a more in-depth view than that, guys. That's pretty good. Right, so I've got Steve W is asking Sven CarlIN, Sven CarlOut on Warren Buffett. What was your angle there, Steve?
Well, we sort of touched on it already a little bit here. I mean, Buffett is a big advocate of the idea that people should stop picking stocks and buy the S&P quite a bit. Sven is not a fan of that idea, from what I understand of it.
Buffett is also not a fan of that, but Buffett says, I never told anyone in my life to invest in Berkshire. So he says, if you don't want to spend any minute on investing, then invest in an index fund. But if you want to learn about investing, then you can talk to me. But he knows that when he's speaking on CNBC, he's talking to 99% of the population where he knows that they would do better to automatically invest in index funds, set it and forget it. Don't think about it, but be sure to especially buy through thick and thin.
So and I do have another angle here on this, actually.
Just on Buffett.
Sorry, go on. Yeah.
Just on Buffett, watch what he does, not what he says.
That's a very popular
thing to say. I think that's a good principle in general, for what it's worth. Yeah. I mean, one thing he's done, at least, or I think I was reading that he's done, is buy back Berkshire Hathaway in the last quarter or so. I think you sold out of Berkshire Hathaway, right?
Yes, I think we bought again a year ago, and then it went up about 60-70%. And it's such a stable company. It's such a good business. It's such really something so stable that it will not grow fast. So I'm just looking for better opportunities. So again, when it was giving a 10% earnings yield, I say it was low risk, good reward for Berkshire. Now it's around 6-7% long term, which is medium risk, medium reward. So still excellent, still great, but I just had a small position, so maybe I'll come back. You never know.
I reckon he's Sven CarlIN on Warren Buffett. Over to you.
Yeah, I go with Sven CarlIN there. Promised you, Sven. We've only got 3 more for you. 3 more, so that you won't be around forever. I'm just giving you some light at the end of the tunnel on this one. We've got the next one is copper. I'm going to tell you that he's Sven Carlout now because I think he believes we're in the top of a copper cycle there. But the next one after that is lithium. Sven, are you Sven CarlIN or Sven Carlout?
Sven CarlOut, because I've listened 2-3 years ago to Lucas Landin, which is one of the best investors in mining stocks, from copper, Landin mining, from uranium and everything. And he said that lithium is very hard to invest in. So it is great speculative, but from an investing perspective, it's very hard. And I spent a lot of time looking at, and there is so much lithium in the Earth's crust. They just need to be incentivized to dig it out, and they can dig it out at $2,000 to $3,000 all over Europe, England. They can dig it out at $2,000, $3,000 per ton. So the current price of $10,000, $12,000 is really incentivizing them to put on the big mining guns. And when they do that, it's too risky. Speculatively, it was, of course, a great play, but long term, I think it will even out if it will boom. So that's the complexity of investing in lithium. It's complex. That's it. You really, you need to be a speculator to speculate in it. And I prefer investing.
That's very good. Okay, so next one, big tech. Sven CarlIN, Sven Carlout. Big tech.
In,
as in to invest
because
in.
They are, yes, because they are building moats. As time passes, the moats are getting bigger and bigger. The cash flows are getting bigger and bigger. They are investing in better and better businesses, servicing everything. So from a business perspective, I'm really in.
That's
good. Of course, I bought Apple in 2016, but that's different.
Oh, a little slide in there. Oh, Sven did really well on Apple, in case anyone didn't know.
I would point out, though, that one of the reasons I'm not interested in Apple at the moment is from watching Sven's videos. I mean, his stuff around buybacks in Apple has really been convincing to me. I would point that out.
It depends on valuation, so it depends also on your expected return. Apple is now, 5 times what it was. So the return is 5 times smaller and the risk is 5 times bigger. So that's something to keep in mind. But the businesses like big tech, Google is a great business, Microsoft is a great business. So, and when you own great businesses, let's say from an average investing perspective, you can't go really wrong. If it goes down, you buy more. If it goes up, you're okay. So
not to
Amazon
mention,
is such a great business. So if
not to mention Baba,
so
which
you
were
can't
quite
go wrong,
interested in recently. Alibaba, you were quite positive on them recently, weren't you?
The risk reward is really pretty positive. So I've made a few scenarios. I think a week, 2 weeks ago, I spent 7-8 days working, wrote a 70-80 page report on them. And the risk reward for investing in them is pretty positive. When you look at what they're doing, how they're doing it, and when you analyze the situation around them, it's mostly sentiment, because everyone hates China, of course, you need someone to hate. But what they're doing, businesses, always such businesses will be hated and up and down. But from an investing perspective, few things can go wrong with such companies, Tencent, Alibaba.
And there's one more that I need to ask you, because you're CarlIN on big tech, which we weren't sure if you were going to be in or out on it. That's a very good one. But Steve D, who's not here today, wanted to ask you, breaking up big tech. How do you feel about breaking up big tech? Carlin Carlout?
Irrelevant.
Irrelevant.
So,
I thought you were going to say that. I did think you were going to say that. I guessed in my head, I went, this doesn't matter. It just doesn't matter, does it?
Irrelevant. What if we go back to ESG companies, do you know what every company is doing? Okay, let's just sell our bad assets and we are sustainable. Yeah, and the bad factories and the bad assets are just sold to a new company that is not sustainable, that is selling the product to Africa where they don't care about it, or India. And you just go on. So it's like splitting big tech. Okay, you're going to separate Facebook and Instagram, and then they're just going to make a contract and that's it. Or you want to go back to, or you want to go to communism, and that's a totally different thing. But,
well, that was
so
probably where I was going to go
Yeah.
to next for you. Is I know you're talking about, we're talking about from an investment perspective that, breaking up big tech probably doesn't really matter because they'll just all contract out to each other anyway. But I don't like to get too political, but from a humanitarian point of view, what do you think? Do you think big tech's good at the moment? Do you think it's too invasive, or data mining problems, or what do you think?
Depends on the company. For example, Facebook is really playing with your mind. They are really looking how the dopamine reacts, and they are looking at your actions, and they're trying to make you addictive to it. But on the other hand, some other businesses like Amazon, okay, I want this and this book. I'm living in the mountains in Slovenia. I go to Amazon Germany, I click on those books and buy it. And in a few days, I have it at home and I can read those books so that I can make a book review. So nobody is controlling my mind there. So there is good and bad. I think in China, a few years ago, they limited the amount of time a person can be on an app, which I agree, for example.
Yeah.
I think all those gamings, they limited it. They say you can be so many hours and that's it. So I think it's always about, I'm more about individual responsibilities there. So of course, wasting time on Facebook or wasting time about looking YouTube crash videos, that's a waste of time. But who am I to tell you that? Who am I to tell you how you should spend your time?